Okay, our job today is to make sure we get our margin prospecting portfolio set up and then take a screenshot of it like this one and turn it in for the assignment in Canvas. So the rules were you get $10,000. You can do New York Stock Exchange, NASDAQ, or over-the-counter stocks. We don't want foreign exchanges, so that would be like German, French, Korean stock exchanges. And what we have is 3 weeks to make a return on this investment. So we want really risky, small companies, low share prices, and this is not how you would normally invest. The reason for this is because in the 1920s, a lot of people were prospecting in the stock market. And when you buy in a margin like 5 to 1 or 10 to 1, you're setting yourself up to either make or lose a huge amount of money. So this kind of contributed to that stock market crash. The link to Google Finance is right here. Click that. Make sure you're logged in to your same email account you set this up with on your block day. We're going to go to portfolios, and you should have a margin prospecting one you already set up. I'll use one from a past year. We should have put a deposit of $10,000. If not, you can click deposit, the date, put in the dollar amount without any symbols, and hit add to portfolio. I won't do that because I don't need to. And then the big thing is just do some research and reading and talk to other people, and you can go to some penny stock websites. If you really don't want to buy penny stocks, you can buy some big companies. But there's a link here to a good penny stock website called allpennystocks.com, and you can come do some research and get some tips. It's really risky, so don't feel like you know all the answers. You're just going to have to gamble. There's also a stock screener tool in Google Finance that you can use. It's not cooperated perfectly the last couple days, but you can adjust the sliders. We basically want small market cap companies, which means they're not worth a lot, so it's risky. And then for share price, we like low share price, so we can buy a lot of shares. So my recommendation was a share price, the lower you go, the more risky, but a few pennies all the way up to like $10 a share. And then for market cap, I'll show you some examples. These were from past years, and you shouldn't necessarily just do what I did. This one looks like it hasn't been getting traded a ton, but you can see it's just over 2 cents a share price, and the market cap is $6 million. So this is just a tiny, tiny company. Not only could you have your share price go down, but this is the kind of company that could like disappear overnight or go bankrupt, so it'd be ultra risky. But if this goes from 2 to 5 cents, you know, more than doubled your money. So that's the idea behind it. Here's another one. Share price is 66.6 cents. Market cap's only about $18 million. That's a really small company. And all you need to do when you find one you want to buy into is you need to know the symbol. Make sure it's on one of our exchanges like NASDAQ. So this one's AMDA. You can just copy it if you don't want to have to remember. And then you need to know the share price. We just go add transaction data, making sure we're on the same portfolio we were before. Paste in your symbol or type it in. Put the date. Price, this one's 0.66, so that's like 66.6 cents. You have to do a $10 commission for all your trades from now on. Only the first day was free. And then for number of shares, the easiest way to do this is just think about how much money do I want to put into this AMDA stock. Let's say I want to do $1,000 worth. I'm just going to take a calculator and go however much I want to invest, in this case 1,000, divided by the share price. This will tell me how many I can buy. So this would be about 1,501 shares. And make sure you're deducting from cash. I have $2,600 in cash. It's going to take that and turn it into this stock when I hit add to portfolio. And you want to do that for all of yours The more you spread out your money, the less risky it is. If you want to live really dangerously, just take one penny stock, buy $10,000 share worth of shares, and then when you feel like it's kind of peaked, let's just pick a different one to look at. I don't even know what this company is. Let's say I look at this 3-month trend and I'm like, you know what, I feel like it's going to trend back down. I've made a little bit of money. Maybe in the 24 hours I've held this stock, so I'm going to sell. You just go back to your portfolios in the same way that you bought stock by hitting add transaction data. You're going to do the same thing. You just switch it from buy to sell. You can sell some of them. So like this AMDA that I just bought in, if I wanted to sell those, I do the exact same stuff I did before. Put in the symbol, the date. Let's say I own 3,002 shares. Let's say I just want to get out of that altogether. I feel like I've made my money and I'm going to be done with that. I'm going to sell that. I have to pay a $10 commission. Make sure I'm deducting from cash because that'll add it back. I don't know why that didn't work. But you don't have to hold the same stock the whole time. After a day or two or a week or two, you can sell. But you have 3 weeks, and then you're going to go through and sell all of them, cash them out, see where you're at. These numbers at the bottom kind of tell you how you've been doing. The biggest thing is overall return, which is a percentage. And then you can also look by day, how much have you made in dollars, and then percent also. So just play with it, have fun. When you're done, go to your snipping tool. You just go to your start menu, snipping tool, take that picture, upload it for this assignment. That's all you have to do is invest all your money. When you're done with that, you have 2 things you can do. You can read this link right here. Is an awesome website called Investopedia, and it has a little tutorial on basic stocks, terminology, and how they work. It's really interesting. They're very short, so it doesn't take you very long to go through them all. And then you can also go make your own portfolios and say you want to just take $1 million and buy some of your favorite companies. When I did some that we did a year-long challenge, I did some bigger companies, so like you can tell over time most big companies are going to go up. Like in the long run, you usually win if they're high market cap companies. So it's like GE. So if you look at a stock quote for GE, the market cap's almost $300 billion. So this is a huge company. And you see like over 5 years, you're just kind of bound to increase in value with these big companies unless something really strange happens. The other big one for me, Nike, wasn't doing so hot when I bought it. If you zoom out, somewhere down here in the, I think, $30 range, and then you can just tell over time it's done nothing but trend up in the long run. So you can give yourself $1 million or $100,000. Just go to portfolios, create a new one, call it whatever you want, like $1 million challenge or something, and you can just invest. If you want to do a fun one, like I showed some of you guys, I did a flip a coin one where I just went down a list, flipped a coin. Heads, I bought some 100 shares worth. Tails, I skipped it and I just kind of did random ones, and my overall return over like 2 years was 17%, which is pretty good for flipping a coin. Sometimes you'll do better doing that than you make an educated guess. So submit your screenshot, then you can read this Investopedia tutorial right here. It should look like this, and then you can play all you want with making other portfolios. So have that turned in, and then next week we will look at some other causes of the Great Depression besides the stock market.